Hey guys, Lux Capital here. I'm gonna make this is the revamp video. Let me adjust my mic here. The revamp video for the Nexus, talking about the Nexus Blast model. I wasn't really satisfied. Like I said, I wasn't really satisfied with that last video, and this one should be a whole lot better. The first thing I want to show you guys is he's actually collaborated with a developer to create an indicator that plots all these lines for you. Personally, I kind of liked plotting those lines. It just kind of helps you dive into the chart and really see things, mark them out manually, and just kind of really connect with the chart. But it's a lot of work. It's not for everybody. And I'm going to try the indicator and just run with it for a little bit this week, I think. See how I like it, see how it works. He's got a recent video up, I think he just put up today, on Nexus Blast YouTube channel. Go check it out. He talks about it, shows it, that kind of thing. But so the first thing I'll show you is the indicator. It is this one here, Session Range Highs and Lows Liquidity Tracker by Sam Julian. You can right now only get it by clicking the link in Nexus Blast's video description. It's going through the approval process, so it won't be available just by searching it here. So go check it out if you like this model, if you like this indicator. So what it does is it plots all of your vertical lines, which is where I'll start explaining the model really quick. So what you're going to do is, if you're doing this manually, or this indicator does it for you, is you'll have a vertical line plotted at the beginning and end of every session of every day. So starting with the first line, it's at midnight, 12 a.m., midnight every day. Your second line, which I have green for midnight, so when I'm at a higher time frame, I can kind of see the days. It just kind of makes the visibility a little better. Then you're going to have a vertical line at 8 a.m., 1 p.m., and 7 p.m. Those are your sessions. You've got midnight to 8 a.m., which is kind of the London, Tokyo-ish, overnight, whatever you want to call it, session. Then you've got 8 a.m. to 1 p.m. That's New York a.m. session, including the lunch hour, which is meh. Sometimes it makes a run, sometimes it doesn't, depending on the day. But then you've got 1 p.m. to 7 p.m., which usually the market closes before 7 p.m. But that's your afternoon session. Really, it's like 1 p.m. to 4:30. So that plots all of those vertical lines for you. Then, as a session completes, you draw a line, a horizontal line, at the high and the low of each session between those two vertical lines. And then you wait. You do that every session, and you just wait. As soon as the next session starts and it takes one of those liquidity levels, this indicator will turn it a different color for you, or you turn the horizontal line a different color or delete it. That liquidity level has been taken. The highlighted bright colored ones here are yet to be taken. So I know I've got a lot of other stuff all over this chart. This is probably going to look crazy, but I like to mark out my higher time frame, fair value gaps, and a couple of order blocks. But if you'll look at this, I have it set to extend those horizontal lines, and I have it going back all the way to almost the beginning of the month. So it'll extend all of these liquidity levels that are yet to be untapped. And what that'll allow me to do is, when you're really in here, I probably zoom about this much. This is the 15-minute chart at the moment, but when you're really in here looking and trading, say it takes this liquidity level, makes its market structure shift, comes out into a fair value gap, and you're looking to go short, you can look at where's the next liquidity level that it hasn't taken yet. It's got to, obviously in this case, bust through some high time frame obstacles, but it'll allow you to find liquidity targets. Honestly, going bullish is probably more adequate for this example. If price comes down here, fills this daily fair value gap and starts market structure shifting up. We get a bullish run. We just took that, so the next session will make it a new low. So you'd set your stop loss there, and you target the recent session high for a partial, the next session high, the next session high. All these levels are left untapped, right? So those will be your targets depending on how far you really want to go. I like to go to the most recent one or two back. Then I can enter, take a decent profit, and leave 1 or 2 micros to run and see if it hits anything further. But I like to get in and get out. So most of my trades are relatively short and dense. Short as in time amount of time it takes. Dense contracts wise, I like to take a majority off at my first TP. So that's kind of the indicator, the model, as it is. So how to trade this, I will show you. Let's go to Friday. He did this example. Jay from Nexus Blast did this example on his YouTube channel as well. So might as well just run through this one just to show you how it goes. Where are we at? 12 a.m. So let's bust this over to 8 o'clock. What are we at? 5:15. 7:45, boom, there's 8. So session starts. As soon as session starts, we've got our low here, and we've got our high here once my line moves out of the way, which we're going to swipe right away. So you'll see this gray line. So the high from this overnight session has been taken. Now we're looking for shorts. So the first thing you'll do is identify the session prior to what you want to trade, that liquidity getting swept. If you're trading New York AM session, you're looking for the overnight to be swept. If you're trading New York PM session, you're looking for New York AM to get swept in whichever direction, so on and so forth. So in this case, overnight got swept buy side, so we're looking for it to market structure shift down and then trade back into a fair value gap. So let's wait. Now that we've swept, let's wait for a market structure shift in the opposing direction. So we can see it's starting. You can see the line for the session's high and low is following the current candle, the current price. So this is we're going to zoom out a little bit. This is pretty volatile. 930 is pretty wild, but we've gone up. We definitely are coming down now. It also took out this level. I don't know. Did it show it turn? Let me go back for a second. I want to see if it... See this previous level in the next candle? Will go back to gray. We've taken that. No need to show it highlighted anymore. So we've taken this level and yesterday's, technically Thursday's high. Then it impulses down really hard. Makes a structure shift here. Well, it's a wick close. We want to see a body close. So there's a new swing low there. There we go. So there's a body close. Are we making a fair value gap? I remember this day was pretty messy, so I don't know if I'll even get this one, to be honest. Where is it? Oh, it's because we're on the 15. Oh, I'm so sorry. Back it up. Back it up, back it up, back it up. I like to look for the liquidity sweep on the 15 because I'm really looking for, I'm not looking for much, right? So once the liquidity sweep happens, roll it back. Once the liquidity sweep happens, you drop down to the 5 minute. On the 5-minute, you look for the market structure shift. I messed up this time and last time. That's okay. So now we'll play it out. Not a body close. There's a body close. So there's a body close, market structure shift right here. And a nice fair value gap here. And just to make sure that that is an appropriate fair value gap to take entry on, we wait for it to start to retrace. Well, this went pretty quickly, but that's okay. In this case, we've got many opportunities to enter. But once it starts to back off, or keep this fib drawn as price is moving. So as soon as it makes another low, then we draw our fib at 50%. Up here is a premium, which is excellent for selling to go short. You want to sell at a high price. And down here is the discount. Obviously, you want to buy at a low price. But you want to sell at a high price, buy it back at a low. So this fair value gap is above our 50% line. It is in a premium, perfect for selling. So this is where we will take entry. That's not a short tool, so we'll take entry. I like to measure it off of that candle and move it over. Fair value gap or stop loss. My comfortable level is 5 handles. I don't think this makes it with 5 handles, but I don't remember. But ICT's rules are at the, in this case, high of the candle that has a fair value gap, or at the high of the second candle, which is the start of the fair value gap. 12 handle stop loss is absurd, and I would never do that. So even though it's a couple points above my comfortability level, it checks all the other boxes. We've got a sweep. We drop down to the 5. We've got a market structure shift, a fair value gap, and a premium. And we've already been pretty bullish. We've taken out the highest high. The next liquidity grab is going to be a sell side liquidity grab. So to me, this just checks all the boxes. Now you can see we've got an untapped liquidity level here, 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 and down here. Yeah, I think that's it. So this big box is actually a daily fair value gap, so there's a lot of resistance there. I would probably choose my target here based off of the fib projection. You could also go for it and go for the liquidity level. Take partials along the way. I'm just going to leave it here just to see. I don't remember if it gets down this far. So I'm going to leave it there and just see. But what we're going to do is I want to see if I can, I might back it up, but I want to hit the sell button here just so you can see. Let's go with 10 micros. It's 1 ES full contract. I just want to see the numbers, but we'll see if we can get it close to the entry line. Since this is, oh, look at that, perfect. So we're going to sell right there. And watch how this happens. We'll move price over here. It does do some considerable drawdown. We're at 5 handles of drawdown, so not comfortable, but it does move pretty quickly. Scares you a little bit as an inversion fair value gap, but I haven't seen this model plays out in your favor so many times. Go watch Nexus Blast's videos about it. He's got a spreadsheet that he's documented everything. It is quite accurate. And so far, I've had very good success with it as well, minus my own hesitations and psychological. The model works really well. So as of now, I'm just checking the boxes. If my boxes are checked, I'm entering the trade and just let probabilities take control from there and let it play out. So anyways, we're going to continue to see how far down this thing goes. So it hits, as soon as it hits our first line right here, we'll take half off. Looks like it does come back up. Another opportunity to enter. It's a choppy day. It's a Friday after a big run. So there's, it kind of came back up a little, but we sell off 5. Nope, I just did it the wrong way. We need to buy back 5. Well, we got a second entry. I'm just going to sell 10 right here, or buy 10 back right here. Anyway, so we have a remaining 5 left to run. This number is no longer accurate, so that's kind of dumb. But it's all fun and games. And comes back into drawdown again. I personally probably would have already closed. When I took this trade live, I can actually show you my executions. I took this live. I closed here before it. Not exactly right here. It was like at this level, at the 0 for the most part on the fib. I closed it about there. Made a good, 8 handles worth of profit. So I was satisfied with that. But continuing on, that would be another take profit. We'll take 3 off there. That's another like $300. And then how far down does she go? Does it take this is what I really want to see. See, it hits that daily fair value gap with a hard rejection wick. And now we're into overnight. So it doesn't make it down there, which is totally fine. Like I said, my initial thought was take it at that negative 50% or 1.5 standard deviations. You don't have to do this. I'm adding this to the whole thing. Aim for these liquidity levels is probably your best bet. So TP1, TP2, you would have been out here long before it starts chopping. I would not have had to go through any chopping either, but take it out there. That's essentially the model. Hopefully that was slow enough to understand, quick enough to not be boring. But liquidity sweep from a session previous, wait for a market structure shift with a body close. It doesn't have to be the first one. If the first attempt to market structure shift is a body close, that's just even more high probability in my opinion. But in this case, it wicked right to it and then shot through right after. So even second attempt or third attempt is okay for this model. But again, if it does do a first attempt candle body close over the market structure shift, it's a higher probability in my opinion. Make sure you enter above the 50% line. Draw that fib out. Make sure your fair value gap is above the 50%. If you have multiple fair value gaps, enter on the closest one to the 50% line. Get in as soon as you can get in. As long as you're comfortable with the risk. In my opinion, 5 handles, but if I have to stretch it to 6 or 7, okay. I'll probably just do like 1 or 2 less contracts to keep my risk at a proper percentage, but that's it. Then you target the opposing liquidity levels. It's a beautiful model and it works, and it's as simple as some check boxes. I think here I can show you what I have for a setup. Literal check boxes. So what I do is I actually go through and check all of these off manually. It just really helps me visualize like this. I've checked all the boxes, enter the trade, period. So like I explained, we look for that liquidity run of the previous session you're in. You avoid the news, obviously. I don't have to change the line color anymore because that indicator does it for me. Once the liquidity is taken, drop to that 5-minute, look for that market structure shift with body close without taking the next liquidity level, which we didn't really talk about, but it didn't do that in this case. Doesn't have to be first attempt. The first candle that kind of pierces through the market structure shift doesn't have to body close. It's higher probability if the first attempt does close a candle body, but in this case, the second one did. So this first candle, hopefully, it's hard to see my cursor on there, I think. First candle closed at the market structure shift line, and then the next one pushed through hard. It did come back, which is great. We want it to come back to our entry. So it punched through hard and came right back. So it was a second attempt body close. That is okay. But first attempt is even more high probability, in my opinion. It really is moving, really wants to go that way. Identify a fair value gap left by the market structure shift, and it's above or below that 50% line. We did that. Look for any other PD arrays. I don't think Nexus Blast does that. Like order blocks, breaker blocks to add confluence. I do know what he does do is look for opposing fair value gaps, I'm pretty sure. So in this case, like there's a fair value gap here that overlaps. There's a fair value gap here that overlaps. So he's got technically 3 fair value gaps. 2 of them are inversion, right? For the most part. Yeah, 2 of them are inversion. So he does look for those, which is great. Go ahead and do that too. The other things that I look for are, for instance, here we have a failed order block turn breaker. It's either a breaker or a mitigation block, but nonetheless, it's an order block that just punched right through. So as we come back to it, it adds an inversion sort of resistance, if you will. So overlapping PD arrays like that are super nice. And that's working? Okay, that's back up again. So we did that. Enter on that fair value gap. We did. Target opposing liquidity. We did. For me personally, I'm banking partials, most of them, at that first liquidity level or even 5 handles. Oops. I'm just trying to get out of some drawdown, so I'm taking as much off as I can right away. And stop loss above the swing point, ideally. In this case, we didn't because the swing point was 12 handles away. And in ICT's teachings, he does say, well, those are really 3 different levels you can put your stop loss at. So it's up to you. Top of the fair value gap candle, the top or bottom of the first fair value gap candle, which is pretty highly common in a lot of models out there, or just straight up at the swing point. I mean, if it's going to go past this swing point, it's going to keep moving. So you really don't need to have a stop loss any higher than this. That invalidates the entire idea. It's just in this case, we had some impulsive movements and 12 handles was too much. Done. Everything's checked. I'm entering this trade, man. And it played out. I don't want to say it played out beautifully. It was a lot of drawdown, came back. Not great. Came really back before melting down. But, if you see here, these are my actual executions. I did enter right here on this first, well, it was a little bit after this first touch, and I actually chickened out. And what was that 481? Yeah, like basically, I think it was a quarter tick drawdown. I closed it out. And then I'm like, it was one of those moments where it was like, I'm still telling myself over and over again, trust the model, trust the model. Look at up here. Actually, hold on. I didn't switch the screen for you guys. I did this already. Hold on. Okay, here. Yeah. So here's my executions. The first one was a loss, and then I actually bought 2 contracts in and came down. But yeah, I bought and then sold it. Just a little bit of drawdown, a little bit of like a quarter tick. But let me bounce back again to this. You see here at the top here, every day I got to tell myself, trust the model, trust the model. So in this case, I was like, F it. Screw this. I am not necessarily like, screw this YOLO kind of thing, but like, screw my thoughts. I need to just trust the model, throw the doubts out. And so I entered again with 2 contracts because that was I actually entered in 1 contract at first, and then I was like, shoot, I need 2 to meet my percentage risk that I want to do. So I entered another one. They were a quarter tick apart. 448-150 and 448-175, going the other direction. And then bounced out right here. I think I said right here earlier. I can't remember. Bounced out right here. Took 8 something handles. 447-350, 448-125, give or take 8 handles or so. You can do the math. Played out really nice. It was choppy, so I got out. As simple as that. This model really works. Hopefully, I mean, I say this model really works. It's not 100%. Don't ever think it's going to be. Nothing is ever going to be. But check out Nexus Blast's channel. I don't know if I said this already. I had to restart the recording. Check out his channel. He's got examples. He talks about it in detail. He's got stats, spreadsheet. It's got a high percentage strike rate. So if your psychology's on point, if you follow the model, if you take profits, maybe even move your stop to break even at some points, it'll make money. It's good. It's solid. I've made decent trades this past week. I'm excited to trade again this week. It's getting me out of drawdown, so I'm almost there. So yeah, that's kind of the model. And hopefully that was fast enough to not be a super long video, but slow enough that you guys are able to follow along and understand it. If you have any questions, feel free to leave a comment. But that is Nexus Blast, and it is a blast to trade. Let me tell you, it's great. So again, if you want to use this model as an easy indicator to print all these drawings for you, check out his videos. In the description of one of them should be the link to the TradingView indicator. Otherwise, that's it. Thanks for tuning in, checking it out, and yeah, catch you next time.